Let's take an email query next. Melville has written in and he says he bought a flat 5 years ago for 15 lakh rupees. He recently sold it for 38 lakh rupees. Now he wants to know if it is necessary to reinvest the capital gains in another property to save taxes. He also wants to know if it is advisable to keep the gains in the bank. What should he do?
So Melville, first of all, obviously it is not necessary to invest. That is your option. And assuming that you've been again holding this property for more than 3 years, if you reinvest in another residential property within the specified time, which is the 2 years within the date of sale or 3 years if you construct, or if you purchase 1 year before, then you can claim exemption of the capital gains amount. If you are simply keeping it in the bank, obviously it will not be eligible, for exemption. You can invest in bonds, which are the REC bonds or the NHAI bonds under section 54 EC, where there is a limit of 50 lakh rupees. But the interest on those bonds is much lower and also the interest is fully taxable. So I think you really need to, see whether you want to reinvest, and in case you reinvest, then the capital gains obviously will have to reinvest. You also not considered apparently the index cost, because your cost is 15 lakhs, but maybe the index cost may be higher because it is more than 3 years. So you then need to check what is your capital gain, which will be subject to tax at the rate of 20%.
Okay, Suresh, you're getting very technical over here. What is index cost? Because he bought it at 15 lakh rupees. He sold it at 38 lakh rupees. Now, ideally for a lay person, if you talk about gains or profit, that would be 38 minus 15 lakh rupees. Now, what does index cost mean?
Yeah, so that's a very, I think it's a very good question.
That?
It's a very good question because many people, do not really take into account this factor. Basically, the index cost means that you adjust the cost for the inflation. And particularly in a country like India, where we have been historically, although last 1 year inflation is a bit low, but historically we have been seeing inflation in the range of 6 to 8% every year. So you imagine if you bought the property, say 10 years back, for 15 lakh, for example. Today, when you do the indexation, the inflation adjusted cost, what is called index cost, may be almost double of that.
How do I get this inflation adjusted cost?
These are notified. If you just check the website, it is all year-wise.
Which website do I check?
You can check on the income tax department website. And so it is every year the cost of inflation index is notified. And you can see that, like for example, right now, it's almost 1981 to now, it's almost 11 times. So if you bought something in 81 for say 10 lakh rupees, today the index cost may be almost 1.1 crore. So you can imagine the potential, so your entire capital gain calculation will change in that. And thereafter you should see whether you want to
essentially what
invest or not.
Suresh is telling you here, Melville, is that it's something, it is very complicated. The math obviously is very complicated. It's not something that you and I can do very easily if we are not tax experts. Ideal thing to do, go consult a tax expert. And also, if you do, since you have sold the property and you've almost doubled, you have doubled your investment in fact, and more than doubled your investment, then it's ideal that you reinvest that in another property if you want to save tax. However, it is your money, and at the end of the day, you are the one who's best placed to decide what you want to do with that money. But yes, if you want to save tax, you have to reinvest it in another residential property. Very quickly, Suresh, for the benefit of Melville and all the other viewers who have tuned in, what is the time period that Melville has over here to decide and actually buy into another property? How long can he hold the money as cash in a bank?
Right. So first of all, the new property must be purchased. It could have been purchased even 1 year before the date of sale also. Or it has to be purchased within 2 years from the date of sale. And in case he is doing construction, then he has a period of 3 years from the date of sale. The only thing he has to keep in mind is that in case the tax return has to be furnished, for the capital gains, which obviously will come in between, like normally 31st July. And if by that time he has not invested and he still is waiting for the time, then he must deposit this in a special capital gains account, and from there the investment must be made.
Right, so you have to reinvest your gains in a capital gains account. You have a maximum period of 3 years within which you have to decide and reinvest those gains in a residential property. 3 years for under construction property, and 2 years if you're buying ready property.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at magicbricksnow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.